that, let's bring in Peter Schiff, CEO of Euro Pacific Capital, and Sean Hyman, editor of The Logical Investor. So, Peter, let's begin with you. Markets rallied back Wednesday after the Fed's 0.5 percentage rate cut point seemed to spark off a massive sell-off. But Wednesday was totally a different story, as we are up more than 1,000 points today. So what brought the markets back up?
Well, of course, number one, it is the Fed. This market has always been about the Fed. That's the only thing propping it up. But I think today's rally also has to do with a bit of a relief rally over the prospects of having Bernie Sanders as a Democratic nominee. I mean, even though people gave him a very small chance, if any chance at all, of actually winning, the fact that he could win, because anything could happen if he was on the ballot, it would be so disastrous for the economy and the stock market that I think the markets at least maybe started to price in some small probability of a Sanders victory. And I think today that's been priced out. I think his path to the White House is pretty much shut down. The establishment has coalesced around Biden. Everybody is dropping out and endorsing him. And you have Warren staying in just to make sure that Sanders can't get the nomination. So I think they've stopped him. But what the markets don't realize is Joe Biden is not a moderate. He is a very liberal guy. He only looks moderate next to Sanders, and he probably had a better chance or has a better chance of winning than Sanders did. And so a Biden administration is not going to be good for the stock market either. And since that's more likely, the stock market should probably be selling off because Trump now has a better chance of losing.
So, Sean, after that Sanders big win in Nevada, we did see the market starting to drop the day after Super Tuesday. As Peter points out, Joe Biden becomes the front runner once again, which who saw that coming 72 hours ago? Markets are on the way back up. I know it's very difficult to connect markets and politics. Who knows if there's any actual correlation? As we know, as they say, correlation does not equal causation. But there is some level of calm in the markets, at least for certain sectors. For instance, today we saw healthcare sectors going way up. Is that a result of saying, hey, we won't get Medicare for all if Bernie Sanders is not either the front runner or let alone the Democratic nominee or president?
Yeah, I definitely agree with Schiff that Sanders is the worst case scenario for the markets. Biden is not much better. Trump is your best case scenario for the markets. And certainly it would be a nightmare for healthcare stocks if you had Sanders in as well. So I can definitely see them rallying off that. And even some other companies like we're in Gilead Sciences right now trying to help solve the problems with coronavirus as well.
Now, Peter, supply chains have also been a really big part of this global manufacturing concern, but now we see local governments in China doing everything that they can to bring the workers back, including chartering trains and planes and buses. So as well as they're also offering financial incentives and all that. So has China jumped in the case of the virus concerns, or is there going to be a second wave hit?
Well, I don't know. I mean, I'm not there on the ground in China, and I'm certainly not a doctor. But, as an economist, I think the central banks certainly have jumped the shark. I think they're making a mistake. I don't think they have the correct remedy for this disease. I think the Fed in particular made a mistake with yesterday's rate cut. I think they're going to make more mistakes. I think we're going to be bringing rates to zero. And I think even governments, to the extent that they feel the need to artificially stimulate the economy, sometimes things go wrong. Sometimes you have problems. And when the government thinks they have to come in, doctors take a Hippocratic oath to do no harm. It's unfortunate that governments and central banks don't take the same oath because they feel they have to do something. But generally what they do actually makes the situation that they're supposedly trying to fix makes it even worse.
And Sean, I also think it's worth noting that one of the few sectors kind of struggling to rally are the airlines. They're pushing to get their numbers back up, apparently with a series of changes, including they say they're going to waive change fees and they're going to waive cancellation fees, which candidly I think they should do all the time, let alone when coronavirus comes around. But either way, airlines are facing losses. So what more can they do? There was a meeting on Wednesday with Mike Pence and the heads of several different airlines to talk about what they can do. I guess a lot of it comes down to keeping the planes clean, right?
It does, and Pence and Trump are definitely trying to do what they can to squelch the fears and things of that sort, and as they should. But there's nothing that's going to bring confidence back just yet until they really do have some solution to coronavirus, get that started heading in the right direction. And before that happens, you're not going to see a lot of people, boarding planes and getting in tight spaces with people from all over the world and strangers that they don't know. They just don't have any incentive to do that. And businesses are telling people, hey, let's get on a Zoom call or a Skype call instead of you going over there and seeing somebody face to face, because they don't want a portion of their employee base dying or getting sick as well.
And Sean, let's talk about oil real quick. According to the reports coming from OPEC Plus meetings in Vienna, Russia said that they will not accept an additional cut in the production of the 1.2 million barrels per day. So with the oil cratering due to the coronavirus, where does this do to the overall landscape of the oil markets?
So they do need to do a further cut, because you've got demand coming down and you've got to bring supply more in line with that. If you don't get some more of a balance, then you see oil go lower. And so they really need to come in and do something. Now, they always do this grappling back and forth, the day or two before they actually make their final decision. So what's happened today doesn't mean it'll be the answer of what they really come out with tomorrow. But if Russia does dig their heels in and says, no, we're not doing any further cuts, that could be potentially bad for oil in the near term. It won't stay there forever. Oil almost never stays 20s, 30s, or whatever forever. It does bounce into 40s, 50s, but it could be there for a little bit. Yeah, absolutely.
All right, so Peter, let's talk about this coronavirus response. So it seems like the market, everybody's been, hyping the fact that, oh, it's coronavirus, and that's what everyone's so concerned about. Coronavirus in the U.S. has not lessened. It's not going to lessen, at least for the next few months. We're probably going to see it continue to rise. And yet, what we saw Monday and what we see today, none of it seems to have anything to do with coronavirus at all. So just quickly here, what do you think is going to be the outlook for the next couple of months? Is suddenly coronavirus, that was such a big deal for the market, going to suddenly magically not be that big of a deal anymore?
Well, remember, the U.S. market was substantially overvalued before anybody ever heard the word coronavirus.
That's right.
So the market needs to come down. And so it was going to come down anyway. And so the coronavirus may be the excuse, but the market's going to go down. And, everybody is trying to figure out what the government can do, to stimulate the economy. I'm hearing about we need to get cash in people's pockets. Look, the government doesn't have any cash. All it can do is take cash from one person's pocket and put it in somebody else's pocket. That doesn't stimulate the economy. It distorts the economy. And of course, a lot of times the central banks just create money to stuff it in everybody's pocket. But then all that does is destroy the purchasing power of the money that people already have in their pockets. So the government can't do anything. The only thing they really could do is the FDA could lighten the requirements to make it easier for pharmaceutical companies to develop cures, to test cures. Instead of, you hear the president's task force, these doctors are talking about how it's going to be a year and a half before they can take a vaccine through all the bureaucratic red tape in Washington. How about getting rid of some of that red tape? How about making it easier for companies to actually offer some of these products? That's one thing the government can do, but unfortunately, it's not doing that.
I think we always want to make things easier, but we still need to make sure the vaccines are still safe to administer. Sean Hyman and Peter Schiff, thank you both for your time.